G'day traders, Free Cash Friday, Mindset Reset. It's the beginning of a 3-day Labor Day weekend in North America. Traditional sort of beginning of heading back to university and to school for most students in Canada anyways. And the kickoff of college football, Go Blue. And today we're going to be talking about reversal trades and trend trades. Free Cash Friday, non-farm payrolls Friday. As I usually reiterate on a Friday, make sure that you end the week strong. Several traders today were patient, as I talked about. Jim Rogers, just patiently waiting until the money is lying over on the floor in the corner. All you have to do is walk over, bend down, and pick it up. Timings and levels. New York Open. After non-farm payrolls released, as I have really sort of hammered home in the last few weeks to just focus on the New York Open. We had major red news coming in at 10 a.m. But not to be trading the news, not to be speculating on any sort of big non-farm payrolls move. We're up high, day 3 breakout traders in the market, a 4-day template on most instruments, almost every single instrument in terms of oil indexes and gold. But we also had several fantastic opportunities in the second hour of where the market's on currency pairs, yen crosses, dragged down to the low of the day for reversal, 50 pip reversal parabolic moves. Reversal parabolic moves, remember the two types of trades. So coming back to understanding what Free Cash Friday is, and I talked about this in the video earlier in the week. Wednesday is a reset day for heading into the closing range of the week, whether it's a continuation for trend trade, whether it's the high-low heading into the closing range for a high of week, low of day, low of week, high of day opportunity, or high of session, low of day, high of session opportunity. But understanding what that is, three levels, whether it's a currency pair, whether it is an index, 3 100 pip boxes, whether it's 3 50 pip boxes, whether it's 3 25 pip boxes. If the thesis is a reversal trade, sometimes this is where traders are getting messed up, is they're inside of a high and a low. And I revisited that in one of the recent videos, is understanding that if you're inside, you need to be in the parabolic move, which several traders hit on the indexes at the open. They were coiled to go vertical on the open before reversing. But those parabolic breakouts from the inside were a coil for a parabolic move that broke the high. So we're up high, end of a high of the week, and like gold, we broke out of the high. We broke out of the high 25 to 50 pips above the high of the day. So several people have emailed and asked, what do you mean though? Is it the high? Where are you counting this 25 and 50 pips from? The high of the day, the low of the day. You'll notice on gold, they went 50 pips below the low of the day, 25 to 50 pips outside of the range. And often that may coincide with a 100 pip box, and they go 25 to 50 pips into the new box. And again, coming back to timings, levels, behavior of price. They broke down. They engulfed after payrolls at 25. They broke down, made lower lows on the inside, and pumped it up into the double zeros for an engulfment into the high bull between double zeros and 25, right at the New York Open for the collapse down through the low of the day. Now, a couple people emailed and said, yeah, but you traded before major red news. That's 9:30. That's 30 minutes for me to be in the trade and take over 70 pips before major red news. The bulk of the trade's entirely off. I have virtually zero risk on the trade. Even if it spikes, it's going to take me out with still 50 pips. You have to understand that when the trade is there, we had an inside day. Payrolls broke the high of the inside day, the high of the week, went 50 pips outside of the range, broke down. The original starter was up high. There's a starter. I'm putting a starter in after the news. Then I'm watching it, and I'm going to add into the New York Open. 3 levels of drop, pumps up for the collapse to the low of the day, but it pumps up just before major red news for the capitulation and the completion of the range expansion on the 10 a.m. news release. Now, just to emphasize, what I've left in the market is virtually zero stress, zero emotion. It's left there because the thesis is inside day traders are trapped at the high of the month, the break of the inside day, the high of the week, sorry. And they're going down to get the money and hit stops on other time frame traders. So indexes gave vertical moves long. They gave reversal trades short. Yen crosses, as I said, low of the day parabolic 50 pip moves. Reversals and trend trades. You can have both. You can have both. The parabolic trend trade on a Friday, the reversal trade, when it coils up near the high of the day. Remember, when I talked about sloped volume, they're going to rifle through that because they've got longs trapped up high. And this is why when I take profits, especially on a Friday, we're heading into the weekend, I want to be taken out as a market's going vertical. And if I'm shorting it, I want to be taking money off when it hits the low of the session. Not necessarily everything if your thesis is a complete collapse through the low of the day, but I want to lock in those profits. Parabolic trend trades, parabolic reversal trades on Free Cash Friday. The reversal trade usually comes back and gets people who are in the money on Friday. Payrolls did not really show any massive explosion outside of the range, like a 100 pip candle or anything like that. And when I go into a Friday, two rules of thumb are always end the week strong and lock in the money and walk away. End the week on a very strong note. Lock in the cash. If you're going to leave a trailer, make sure you lock in profits. Where can a trade fail? 25 to 50 pips outside the range after major red news. It's gone down 50 pips outside of the range, the low of the day, and it's working its way down. I'm going to take the money. But I usually put a spread above the level to take me out in case it just pins down to a level. So, for example, I might take some off at 80, take some off at 55 or 60. I'm not worried about being greedy. I'm worried about locking in the money and calling it a week. Non-farm payrolls, fantastic. Perfect template. 3 levels of rise, 3 sessions of rise on day 3 that breaks out of an inside day high of the week, day 1, day 2, day 3, for a perfect reversal short trade. Euro, pound, same templates. Aussie dollar, New Zealand dollar, same templates. High of day to low of day opportunities on Free Cash Friday. The number one thing to remember, though, is that if you're going to be at the screen, you need to get paid. And so, I think there's some misunderstanding with some people and some of the ideas. They think I'm trying to catch the high and hold on for 5 days and catch the low, or hold on to it for 3 days and get 200 pips or whatever. They've misunderstood. I'm looking for trade setups that are going to pay me and walk away. And they're rinse and repeat scalable in size. So, you get a 75, 100 pip move, and it's a parabolic setup, a rinse and repeat 3 levels for the dump, pump and dump, or 3 levels dump for the pump. Those are income generating trade setups. Income generating trade setups, done and dusted, walk away, nothing left in overnight, nothing left in over the weekend. And if you're going to leave money in over the weekend or leave positions in over the weekend, the number one time you're often going to see a gap is on a Monday morning. Not always, but a high probability, many cases, the most frequent time for a gap to appear between closing and opening price is on a Monday. So if you're going to take positions and hold on for big moves and remember, my modus operandi is where can I put size into the market, and size is relative to your account. And I'm just taking that move and walking away. It's payday. If you can make more in less than 1 hour than most people make in a week, why wouldn't you do that? Or even starting, if you can take 50 pips or 25 pips out every single day, low stress, zero emotion in 1 hour, 25 pips a day, and learn to scale that up in size, you can pay yourself more than your day job in most cases. If you're consistent, next point of order is the traps. Some traders messaged and said they blew their accounts out yesterday on day 2, Thursday's day 2. I've said this before, most people will get chopped up or possibly chewed up on a day 2. And I know there's people out there saying, yeah, but your day count is so confusing. Monday's day 1, Wednesday's day 3. Wednesday resets as day 1 heading into the closing range of the week, and Friday's day 3. Within that, we can get 3-day setups, which is a different setup. I know people think that's confusing. There's day 1, day 2, day 3, and there's 3-day setups. I'm always looking for 3. Where's a day 3 parabolic opportunity? Where is a 3-session parabolic opportunity when I'm trading New York? Whether it's a parabolic reversal, rifling through people chasing the trend as a stop hunt or a liquidity hunt or whatever you want to call it, or it's a parabolic breakout. Peak formation high day 1, peak formation low day 2, coil sideways, parabolic move day 3. Whether it's a reversal trade or trend trade relative to other time frame traders. So today I put up the 4-hour charts to show traders where the levels were, if we were already up high or if they're down low. Pound yen crosses down low, drag them down in that first 30 minutes on payrolls, boom, rifle up second hour 50 pips. No heat, zero stress, 1-bar stops for free cash Fridays. There's a couple traders who think there's nothing easy, there's nothing free, and there's nothing simple about 1, 2, 3. Now, I'm going to just say this with absolute empathy and concern. If you are rifling through money and losing money, and I repeat this every week, stop trading. Because that's you. You have to get the consistency. You have to understand what you're trading. And if you're not consistent, why are you using real money? Don't, in your lifetime, think that something's going to change. Get the results without using real money. Even if you use a micro lot, get the results first. Understand what you're doing. Trust yourself. Protect your financial capital. Protect your psychological capital. And when you step back, like, I don't know how many people emailed me this week and said, since I've been waiting till 9:30 New York Open, my results have gone through the roof. That little subtle mind shift for people to step back and just wait. All of a sudden, it's like the curtains part, and there it is. There's the trade setup. You could have 5 different pairs up and just watch that first hour, shut 3 of them down, and there's 2. Just take 1 trade. You might not have even gotten the best one. But if it's an easy free cash setup for a parabolic trend trade or a parabolic reversal trade, depending on what type of setup it is, it's free cash. Rinse and repeat, scale it up in size. That's it. It is that simple. It really is that simple, and it's that easy. But the only thing interfering with that is other blah, blah, blah. Like people are asking me, are these Heikin-Ashi candles? Is this but there's an order block there and a fair. I don't even know what that stuff is. I will repeat this. I have no idea what that stuff is. There's a high and a low. There's levels, quarter levels, and major round numbers, 50s and double zeros, and there is the time of day. And if you aren't at the high or the low when New York opens, you're inside. So if you're inside, you better be in a coiled market for a parabolic explosion with a thesis already in place. Low of the day is locked in or the high of the day is locked in and they're going to rifle back through. Or you're waiting for it to go outside 25 to 50 pips or to the extreme like we saw in the yen crosses. We saw this yesterday. They coiled for low-hanging fruit, the yen crosses, and went vertical 50 pips in less than 15 minutes, I believe. So there was tons of free cash this week. And don't worry if you didn't get it all. But if you're sitting back and angry and frustrated and complaining, then you really need to stop and step back and go back and start from scratch. Day 1, opening range. Day 2, initial balance. That's the longer time frame setup right there for a 3-session setup, whether it's Asia, London, New York on day 3. And if you've got a peak formation and a failed breakout on a Friday, you're already on day 3, maybe on Tuesday. You might have an opportunity in your session for a trend trade or a reversal trade on a day 2. If you're patient and you wait. When would we want to be looking for that? 9:30 New York time, or maybe 3 a.m. New York time for London, the London equity hour open. So there was plenty of fantastic textbook opportunities. It's a non-farm payrolls week, and honestly, free cash. It was a fantastic week. So I'm just going to keep beating that because I want to hammer home. There's only one thing separating you from where you want to be, and that's yourself, and that's your behaviors and your beliefs and your routines and your approach to the market. If what you're doing is losing money, you should stop everything that you are doing, because it's not the playbook. Okay, it's not the community, it's not me, it's not the markets, because there's a lot of traders this week that killed it. There's a few that made some mistakes, and they made it all back on Free Cash Friday on a couple of instruments. Indexes paid. There was vertical moves all over the place today. And the best part of it is they're going to be back next week, and it's going to be day 1, day 2, day 3 again. And there's going to be 3 session setups again, 3 levels of rise or 3 levels of fall, and they're going to be pump and dumps everywhere. It is what it is. It's not me. It's not my theory. I repeat, it is not me or my theory. It's how the markets work. It is how they work. Timings, levels, behavior of price. Pump and dumps, dump and pumps. Sit on your hands and wait until the money is lying on the floor in the corner. And that is the truth. So fantastic week, traders. Again, a happy Labor Day weekend. And just in closing, remember, I'll post this video again to go and study 3-day weekends, U.S. 3-day holiday weekends. And what we can look for next week, we are going to see a new month, a 3-day holiday weekend. We're going to see some huge moves next week. I guarantee it. I guarantee it. Probably we're going to have Free Cash Wednesday, Free Cash Friday. Fingers crossed. Anyways, it's Labor Day weekend. Michigan's playing East Carolina tomorrow. It's going to be a big weekend for college football and just in general. Congratulations, traders, and I appreciate each and every one of you. Challenging myself to keep getting better, trading bigger, trading, as good as we can get. How good can we get? Like Mike Bellafiore says all the time, how good can you get? What can we learn? What did you learn this week? What did you learn today? I learn something new every single day, which is why I keep saying to traders 1% better every single day. No matter if you made a mistake, you made a losing trade, or you made a winner and didn't hold on long enough. Try to improve 1% every single day. And in the meantime, don't do anything to sabotage yourself. That's the key. And if you can do that, and just be patient and let that snowball will turn into an avalanche of free cash. Have a great day, traders. Happy Labor Day weekend to all my Canadian and American colleagues and friends. Love you and appreciate you. Have a great weekend, and may the markets go with you.